In your journey to get rich, one of the most important milestones that you have to reach is your first 100k. No 100k? No wish. But then, some people be like, wow, 100k? Sure not. Everything's so expensive nowadays. My pay so low. Don't say 100k lah. Even if I got 10k also I'm chill liao lo. Truth be told, I used to think the same way in the past. In fact, I didn't reach my first 100k until I was past 30 years old. Because you know, I sucked at managing money back then. Maybe I still suck. Low. But when I eventually reached 100k, what I realized was that this money not only gave me a solid foundation to grow my money even more, but it also opened up more doors for me to do the things that I wanted to do in life. So, in this video, we'll be looking at why is it so important to hit your first 100k by 30 years old, what benefits does it bring, and more importantly, how you can reach your first 100k. Also, do join my 8,000 members Telegram chat group to discuss or ask any questions that you may have. Alright, before we even talk about how and the why, let's first find out, is it even possible to save 100k by 30 years old? Okay, let's do some calculations. Let's assume that you are a guy who graduated from uni at 25 years old because got an S, and you have $0 savings because you spent all that money buying stupid stuff when you were young. Also, we won't assume that you are some university graduate who has a computing degree and is earning like 5 to 6k a month. Instead, you are just a fresh grad from SIT Bachelor of Business Admin in Food Business Management, which according to the latest Graduate Employment Survey, is only earning $2,969. Sorry if you are from that degree. But anyway, let's round it up to $3,000. Then after being forced to contribute, happily contributing 20% of your pay to CPF, your take-home pay is $2,400. For the savings rate, according to the Minimum Income Standard Report, a single parent with one child would spend about $3,369. But at 25, you are probably not a parent yet, right? Unless you go and shotgun someone or kena shotgun. So a better number to use would be the 1,500 budget for a single elderly person. But then again, this number is a little high because it includes additional expenses that a 25-year-old won't have, such as a housing purchase, housing maintenance, housing durables, and healthcare. Plus, even if you have insurance, it's going to be pretty cheap at that age. So let's assume your monthly expense is only $1,200. Which means you are able to save 50% of your take-home pay. Next, your boss is super stingy, so you won't have any bonus and you don't have any pay raise for the next 5 years. And with that, when you turn 30 years old, you have $86,400. Oh, we are still off by $14,000. GG lo. But wait, that's because we are using some lousy savings account that gives us 0% interest rates. So what if we park our money in a high interest savings account that gives us 3.85% interest? Oh, the savings have improved to 95k, but we are still short of 5k. Next, what if we get just a tiny pay raise of 4% every year, but minus off the 2.6% Singapore inflation, and tada, we have managed to hit 100k by 30. Here, I want to point out 3 things, with the most important point being the third point. First, I'm using an incredibly pessimistic number where I'm assuming that you start with $0 savings and you have low pay. But according to statistics, chances are you'll be earning more than just 3k a month at 25. For example, if you are a poly graduate, you have graduated and have started working by 23. The latest poly graduate median pay is at $2,800. So by the time you turn 25, your pay could be higher than $3,000. Or if you are a uni graduate, your median pay would be higher at $4,313. But whatever the case, the calculation shows that even if you have a low salary, it's still possible to reach 100k by 30 years old. Second, even though it is possible to hit 100k by 30, it still requires you to put in some effort to save your money. Because if it's your first time earning 3 to 4k, it's definitely tempting to spend all of your money on a ton of stuff that you don't need, like branded clothes, branded bag, and Pao Pao Cha. So in order to reach 100k by 30, you will need to be super disciplined to save up your money and not succumb to lifestyle inflation. Third, if you look back at the chart, you will see that a huge part of the 100k is coming from your savings and not your interest or investment returns. Interest only contributes to 12% of the total amount, while the rest comes from you working hard and saving that money. Or maybe with some incredible luck, you are able to invest and get a 12% average return every year. and achieve 100k by 29 years old. Even so, the interest still contributes to just 30% of the total amount. That's because this is just a super short time frame, so there's not much compounding going on. Plus, there's not much money to compound either. So the only way you can get around this is to focus on saving as much money as possible. And that is also the reason why Charlie Munger once said that saving your first 100k is the toughest, because most of it will have to come from your hard work. But once you reach 100k, that's where the magic starts to happen. Quick pause. If you have a home loan with banks, listen up. When interest rates go down, you can do something called mortgage refinancing, where you take out a new loan from another bank, typically with a lower interest rate, to replace your existing mortgage, thereby saving on monthly repayments. But which bank has the best mortgage loan right now? It can be super tedious to go and check one bank at a time. And that's where Property Guru Finance can help. Property Guru Finance is an online mortgage marketplace that helps to simplify every step of your home loan journey. And yes, that includes refinancing. With their innovative Smart Refi feature, you can now check your refinancing eligibility and see your potential savings in under 2 minutes. To use it, you can head over to Property Guru Finance homepage. Under the Refinance menu, click Track Your Savings and start Smart Refi. Then just answer some quick questions about your current mortgage, and with that, you now have a personalized refinancing proposal. With this proposal, you will now know whether you should refinance now or later, how much you could potentially save by refinancing, and what are the best refinancing home loans based on your unique needs. Property Guru Finance isn't just about online tools. It also has a team of dedicated mortgage experts ready to handle the end-to-end home loan refinancing application. So if you decide to proceed with your refinancing, you can just simply click Customize and book a call with one of their mortgage experts. Property Guru Finance has access to the best refinancing rates from 13 major banks in Singapore. Its in-house mortgage experts will help you compare rates and craft a refinancing plan tailored to your specific financial goals, whether it's saving money each month or freeing up cash for future plans. So if you are curious about refinancing, head over to the Property Guru Finance website, try out Smart Refi, and see if it's time to make your home loan work smarter for you. Assuming you are saving and investing $1,200 every month with a 7% annual return, it will take you 6 years in order to reach that first 100k. But after that, it will take you 4 years to get from 100k to 200k. Then 3 years to get from 200k to 300k, until you inevitably reach your first $1 million.
I am inevitable.
Besides that, you will also notice that the longer the time frame, the more interest that you will earn, until it eventually overtakes the amount of money that you are putting in every year. And that is the magic of compounding, where the more money you are investing, the faster your money will grow. With this 100k, you will now get a lot more options in life to do the things that you want to do. Like imagine if you had invested this 100k into a portfolio that's earning 4% in dividends every year, you'll be getting $4,000 in passive income every year, or $333 coming in every month. Obviously, with this extra money, you can't quit your job and travel the world yet. But with it, you could afford to eat a better meal, or go for short weekend getaways, or even fund your small side hustle. And trust me, this amount is more than enough to do something that is potentially life-changing. So then, how do you get to your first 100k? I think more than anything, the first step is believing that you can even hit 100k. If you don't believe that, then you will never get there. One method that I find super helpful is giving it a purpose. You need to understand, why do you even need to hit 100k? Everyone's purpose may be different, but for me, it's because I eventually want to hit $1 million and achieve financial freedom as early as possible. This will not only let me quit my job, but will also give me options to do the things that I want to do. So once you have done step 1, step 2 is to start budgeting your finances. For this, most people will tell you stuff like cut your expenses lah, or spend on needs, don't spend on wants lah. While all these are good advice, I feel they are pretty much useless because it relies a lot on your willpower. Instead, it's better to set up a system to force you to save money. Like, save money you little piece of shit. So the easiest way is to open up a second bank account. Then set up recurring transfers to automatically transfer your money to your second account. That way, when your salary comes in every month, you will automatically be saving money. This, by the way, is called pay yourself first, where you are saving up for your future self. For this, here are some savings accounts that you can use. UOB 1, which can give you a 3% interest if you can spend on eligible UOB cards and credit at least $1,600 salary into the account. And by the way, PayNow transfers will also count towards the salary crediting criteria when you put salary as the purpose of transfer. Or you can use Marybank, which is currently giving a 2.88% interest till 30th June 2024. Otherwise, you can also check out money market funds, which are currently giving around 3.7% 7-day yield. You can find them in brokers such as Mumu, Tiger Brokers, and Webull, or even the Cash Plus Extra portfolio by UOB AM Invest, which is currently giving a slightly higher yield. Though, all these are considered as investment and not a savings account, yeah. So there's a small risk of losing your money. Besides paying yourself first, you can also learn how to use a credit card. That's because by doing so, you will get to earn cashbacks or miles, which will give you even more savings. And you will also get to enjoy sign-up rewards whenever you sign up for a new card, which by the way, is not just some lame rewards like a free pen or free notebook, yeah. There are some awesome stuff like Nintendo Switch, PlayStation 5, and even Atas Dyson hair dryer, yeah. But of course, there's always a limit to how much money you can save. So the next step is to increase your income. For this, you can ask for higher pay. But of course, don't go and ask for higher pay just like that lah. People always think, oh, I got do my job well. I never take any leaves, therefore I deserve higher pay. Sorry, yeah, you won't get a pay raise just by doing that, yeah, because you are just doing what you are paid to do. In order to get a pay raise, you need to do a lot more than that, such as taking on more responsibilities, helping your boss solve his pain points, and bringing more value to your company. By doing that, you can better negotiate for a pay raise. And even if your boss can't give you a pay raise, with all the extra experience that you have gained, you can easily switch to a better paying job. Besides getting a higher pay, the other way is to, you guess it, take on a side hustle. With the internet, nowadays it's becoming easier to earn money online. In fact, an OCBC survey found that 66% of Singaporeans in their 20s already have a side hustle. There are a ton of jobs that you can do, such as video editor, designer, tuition teacher, translator, e-commerce, and so on. So start hustling. Finally, start learning how to invest your money. While it's true that your money can't compound that much in your 20s, the truth is that by starting early, you get to pick up good investment skills while you are still young, such as how to look for good stocks, how to hodl when the markets are crashing left and right. Plus, you get to experience what it feels like to lose money. And that is important because once you experience that, you will slowly get used to experiencing market fluctuations and eventually learn how to control your emotions a lot better when it comes to investing. Alright, here are my thoughts. While I've said that it's important to hit 100k by 30, the truth is that everyone will have different life circumstances and everyone is on a different journey. So if you are unable to hit the goal by 30, like me, it's perfectly fine. But whether you hit it at 30, 35 or even 40, I think the more important takeaway here is that if you really want to get rich, you need to start building up good financial habits. Because once you have hit 100k, given enough time, you will eventually hit $1 million. And by having more money, only then you have more options in life to do the things that you really want to do. Anyway, that's all for this video. Hopefully you found this useful. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.